All right, so let's jump in. Do you really need international dividend stocks?
Do you really need to subscribe?
What?
That's the most important thing. You always jump right in and you don't say an important part. People can miss hanging out with us if they don't subscribe.
This is gonna be a crazy show today.
Well, I gotta make sure. Subscribe. Now you can go.
All right. Take two. Do you really need international dividend stocks? This is a topic I feel like comes up all the time.
Yep.
Quite a bit.
Because we have been, I don't want to use the word brainwashed, but I'm going to. We have been brainwashed that we need diversification. Like, you want to talk about buzzword in our space.
Oh, yeah.
It's diversification.
That's it.
So that's what we're going to kind of tackle today. You know, are we too concentrated in the United States? You know, are you missing out at international exposure? You know, you need global diversification. You know, there's lots of things here. Now, the first thing that we're going to talk about doesn't really matter.
I don't think so. I think it's all about picking the right companies more than it is based on a geographical location. Where they're doing business matters, but where they're headquartered doesn't really matter.
And I would back that up. And there's some things that we're going to talk about later in the show. Like, is there really like companies that are just the United States?
I left that part out.
Yeah, I was like, wait a minute.
You know, we don't have to dig in too much on that. But the reality is, like, and this is really the heartbeat of today's show. Do you really need to make your dividend portfolio super complicated to build a really good dividend portfolio? And we'll let the cat out of the bag here. No.
Yeah. That's what I feel like it's really doing. Whenever you start investing in companies that are outside of just the US, now you're looking at all other, like a lot of different types of risk outside of just the market, right? Like you're looking at currency, like now you got to worry about, are they keeping up pace with the dollar or vice versa, and all these other things that have to happen.
And it's so important we try to educate and make sure you understand what you're invested in. And some people are just trying to understand, you know, what they're currently invested in the US, to go and add that complexity. You might be investing in it because you think you're supposed to, but you don't even really understand it. And all the points that you just made are the reasons why.
Yep.
So just make sure that if you do, you understand why. And we're going to talk a little bit about
Go
if
international.
You do invest in international, just understand, make sure it's with your goals, then you feel comfortable with it and all the reasons. And Kyle just brought up, there's 3 or 4 that the complexity.
We're going to talk more about that. So I guess the first, as you two were talking there, the first thing that pointed out to me is, let's define what international means.
Right.
Because when I'm saying, do you need international dividend stocks in your portfolio, I'm talking about, and you said the buzzword, headquartered. So where did the company originate? Where are they headquartered? Where's the company actually located? Now, I know a lot of European, Asian companies that are headquartered in their main offices or in their country, yet they have huge presence, you know, and there's cars all over the road that would indicate that. There's appliances in your home that would indicate that. Like Apple.
There's soda in your fridge that may, as much as it hurts me to say it.
Soda's different.
Oh, soda's different.
He's going the other way.
The opposite. That's the opposite.
Oh, headquarters. Sorry.
So,
stay tuned.
Yeah. in tomorrow's show. But what we're talking about here, just because they have a U.S. based operation doesn't mean they're U.S. based. Just because a U.S. based company has an operation overseas to your Coca-Cola comment.
I had to get the Coca-Cola thing in there. Sorry.
Then, because nobody drinks Pepsi overseas. That
we're going to know what it is.
They're going to go,
not
Pepsi.
Nice.
Not nice, but true.
Actually, back to the regular schedule program. That's tomorrow.
Okay, so let's just jump in. Most U.S. dividend companies are what? Are they actually, are they just domestic?
I would call it like multinational. I mean, you've got companies like Procter & Gamble, Coca-Cola, they're in almost every country that's out there.
Yep.
So to say that you're not internationally exposed whenever you own those would almost, that just is a false statement.
I love that you brought up Coke, and for no other reason than we get to tease you about it. But the reality is, Coca-Cola, when you travel overseas, it is literally the water of the third world countries. You know, where you go to, like, first time I went to Mexico, I drank more Coke than I drank water because it was safer. Because you have to be very careful with the water. In some places in Africa, it's the same thing. And you will see Coke signs everywhere. Coke is a U.S. company.
Right.
Mhm.
But Coke is very much a multinational global institution.
Right.
Yes.
Like it is known. I don't know the statistics behind it of how much of their revenue
is generated in the United States versus the rest of the world. And I'm sure it's very skewed of what is generated here. And same with like movies. It's another thing. Like
Mhm.
if they split up the revenue to domestic versus global.
So it's almost like a 50-50 split.
No, it's
sometimes.
most of the time it's a 1/3, 2/3, depending on the movie. Where it's
Oh,
a third the US and 2/3 global. 'cause
Depending on what the content is.
Correct.
Yeah.
I didn't actually realize that.
Yeah. So like an Avatar, I think if you look, or like the top 10 listing, the reason why they're top 10 is because they resonated globally. And I don't know why we're talking about this.
Yeah, I was going to say.
But there's
We'll
a
come
lot
back.
of
Stay tuned.
connecting truth here,
Yes.
where we might have a US based company that has made a brand here, but the revenue, 2/3 or more of the revenue can be actually generated outside the United States. Apple is one of them.
Mm-hmm.
A lot of their sales, now they have a ton. I think they're like 90 some percent or 80 some percent of the US market of cell phones, but globally they're like 10%.
Right. Yeah.
Mm-hmm.
So the opportunity for growth for Apple
Mhm.
is not in the United States.
No.
Right.
It's everywhere else.
Right.
Samsung is just the opposite,
Right.
or Android. Yeah,
Android.
that's the
Android.
word I was looking for.
Yeah.
Which is not a US based company.
Correct.
So, all right, dividend culture is different internationally. So here's another big concern here. When we're looking at our building dividend portfolio, one of the things that we look at is culture. Like
Mhm.
how long they've been paying their dividend,
big of a
how strong
priority
is
it
it,
is,
what's
yeah.
their payout ratio, how much cash they have in the bank, how concerned are they, what's their history say, how long have they been paying it? Well, internationally may, for the most part, not be the exact same thing, where they might very much be ready to cut a dividend, where in the United States, they're like, well, I would never want to do
They
that
might just treat it as a profit share.
or whatever,
Yeah.
even though there's
The
history,
revenue. Correct. Yes.
because cultures are different.
That's right.
So to come back, should you own international dividend stocks? Sure, you can. But there are tons of different types of risks related that we're going to address here in a second. We do have a thing called a dividend checklist, which is different than the dividend starter kit. It doesn't address this at all, but you should put in the comments, like, hey, let me check out the dividend checklist and we'll send it to you. But it doesn't talk about this at all.
Not specifically, but it does tell you what to look for.
I just wanted to say that to see how you guys would react.
If you really are, if you're really looking at an international company that does pay a dividend, throw it up against the checklist and see how it scores up. Because, full transparency, we own 2 stocks.
Yeah.
Or our clients do that are international.
Our
We have one-
portfolios do.
Yep. Our portfolios do.
And I would actually say that one of the biggest risks that we're going to talk about, if you own an outside, non-US based company, like one of the companies that we're not going to name, but you're just going to have to be curious about it, is currency risk. That's a big deal. So there's a lot of things that we're going to talk about here in a minute, but currency risk, I think, is the most important, especially with the wildly fluctuating the valuation of the dollar.
Yep.
Going up,
Well,
going
and just
down
all global currency right now.
is a little shaky.
It is. Yep.
So when you're dealing with a dividend stock and it's not the United States currency, you got the euro, you got whatever Canadian, wherever the company is, what is the transaction cost? And you also have to understand, does the company that you hold the stock with, do they allow you to reinvest? A lot of foreign companies, you're not allowed to reinvest in their dividend, which is one of the biggest reasons that you want to dividend stock is that snowball effect.
Mm-hmm.
Well, with foreign stocks, for the most part, you lose that ability. Now you can still do it. You just have to rebalance a little bit more.
Yeah.
You have to be. It's more of a manual
Right.
thing. And you've got the foreign taxes that start coming out as well.
Mm-hmm.
So that has to factor into your actual, what are you yielding from that dividend? If part of it's going to foreign tax and is eating it up, it may not be the best position for you to own long term.
Another risk would be political and regulatory risk. These are
Totally
gigantic.
different regulations in other countries.
Very much different.
Yes.
You look at some of the headlines that, look at an Elon Musk or a Zuckerberg and how things are great in the United States and then they're being sued for billions in some other country.
Yep.
It's just because things are different. There's policies that are, anti-woke, woke, depending on the country you're looking at. And they have to comply with all of that.
Well, and transparency. And sometimes you go to second, or developing countries, and there may not be the same transparency or regulation laws that are here in the States or even more developed countries. And it can be a tough road to kind of navigate, where you end up spending a lot more of your money in those spaces.
Yeah, there's just a ton. I mean, there's enough that we have to navigate here in the United States that I feel like it's very, very difficult sometimes to account for all of this when building a dividend portfolio. Like, there's so much political drama that has taken place in the United States of how this administration has handled things in South America, Mexico. Yet what's happened there has 100% benefited our portfolio. So you have, I would say, a way of doing business in the United States that actually did not account for the vast majority of our portfolio growth year to date. It had everything to do with politics. And what this administration did, which a lot of people see as bad, which is 100% affecting our economy in a positive manner because of oil, and affecting our portfolio because of oil. So, and some of the companies that use oil, but you wouldn't think use oil.
Right.
So there's some really weird dynamics that can take place in a portfolio that is totally outside of the ordinary, that positively or negatively affect. And I have a hard time just keeping my arms around it in the United States.
Right.
Let alone like, okay, who's the president of that country, or do they have a president? Is it like a
and
queen?
what's going on
Or king?
and what's happening kind of from a political standpoint or just regulatory? Is there something on the horizon that we should be aware of? Like, we can kind of be on, have our finger on the pulse here in the US because you can read up on that stuff. It's a little more available. But to go to another country and try to be on like what's happening from regulatory and like, are they going to close down certain aspects of business? And
and we didn't even talk about the emotional part, which is such a big deal. And for
Who
so
wants
many of
to talk about emotion?
I know, leave it to me. But the emotions, you got to understand it, and you got to understand it and believe in it enough to where you want to stay invested. And if you're a lot of people, I'm not talking to anybody out there, but you get your emotions right. You understand the U.S. dividend stock payers, and that's created your ability to stay invested, reinvest. And now you go throwing in that extra thing. If that's going to cause you to not understand it and get your emotions all out of whack and not stay invested and switch and go against your goals, that might be a reason not to, right? So don't just go throw in an international because you feel like you're supposed to diversify. Do what you understand and can keep your emotions in check.
So here's some practical framework for understanding, the international aspects of dividend investing. Like, should you? And here's 3 questions here that you'd want to ask: emotional or not, logical or not, right? Yep. Does this position, this international position, increase my income reliability? That's one question. Does this international dividend stock improve the long-term growth of my portfolio? Or does this add complexity that I don't need, to your point?
And does it allow you to sleep at night, knowing that will pay?
And do you understand it?
Do you understand it? Yeah. There's 5 questions.
So
a few thoughts in there.
Those are really, really good, and to Nikki's point, I know we're teasing you, but understanding the company, the country, the dynamic, I mean, there's a lot there. And again, just being fully transparent, there's times where I scratch my head at our country and I'm like, what's really going on?
Yeah.
And is it going to benefit long-term, short-term? For the most part, we're picking companies that we know can stabilize, because there's companies that have been through world wars and embargoes and all kinds of craziness. And they were champs through it. I can't necessarily say, I mean, there's been some international companies that have been champs through all kinds of international wars. So, at the end of the day, truth is truth, whether it's United States or global.
That's right.
You just have to make sure you're comfortable and confident, and you understand, the impact, the currencies, those risks, things that we're just brushing over, but these are like legitimate, difficult things, conversations to have. And is it appropriate? And we say yes.
Yeah.
Right.
Yeah.
Like, we're not saying, hey, don't put them in your portfolio. We do, but you have to understand.
You need to know all those other factors that are coming.
Yes.
It's not just as simple as like, I want to have an international company
Don't
or 3. and I just go find 3 companies that pay a dividend that
because
are
you have to have international.
Just for international, for having an international stock.
When you
stake.
have an international stake in every stock, probably in your
Right.
portfolio.
Yes.
Right.
Any last words of wisdom?
Kind of just snuck it in.
Yeah.
Okay.
I think
I
that's
love it.
Yep.
All right.
Good
Hope
stuff.
you enjoyed yourself today. This was good.